And good morning and welcome to VSA Capital 5-Minute Morning Miner. It's Friday the 30th of June. It is the half-year end. Everybody's rushing to get the results out. And yes, I'm still here. I thought I wasn't going to be, but I am, Paul. Sorry, I confused everybody, but I won't be here next week. I'll be in Cornwall.
Okay,
morning,
Paul.
Good. Morning, Paul. Energy. I went to a dinner. I went to the Melbourne Mining Club last night, where Gary Nagle, the CEO of Glencore, was speaking. I've got to say, it was a bit of a PR speech. But it was obviously very interesting about what they're doing with their coal and PEC. But I've got to just give a quick shout out here for EQ Resources, who were my hosts. Absolutely fantastic host. And it turned out that I knew virtually everybody on their table, all the fund managers, the clients, and Steve Layton, the host himself, was an NED of EQ Resources. What a fantastic host. What a fantastic person. Turns out that his father was the Layton in Scott Goff Layton, which is where I started my career. Scott Goff Layton merged with Smith Brothers to become Smith Newcourt, then Merrill Lynch, then Bank of America. But it was a tremendous evening. I made a lot of really good contacts, particularly in the asset management side as well. Some big asset managers there. EQ Resources, it's just going into production for tungsten. It's a very similar project, Paul. I know you know it a little bit. To Tungsten West, in that it's got aggregates as well. It's using all sorts, same sort of thing. I guess the big difference, if you look at its share price, it's been actually a really good performer, and it's up 46% so far this year. So clearly, it's got momentum behind it. So well done, EQ Resources, and thank you very much. Right, turning to the news today, Paul. Why don't you talk a little bit about? Actually, there's two I wanted to pick up on. One was Vulcan Energy. There's been a bit of a shifting of the Francis's position. Francis Whedon, who's very talented. He's gone up to executive chair, isn't he?
Yes, he has. He is taking an executive role at the chairman level, giving the CEO and MD position to Chris Moreno, who steps up in that position where he was deputy CEO previously, and the chairman role becomes executive, whereas Gavin Rezos, who had been non-exec chair, then steps back to be deputy chair in this particular situation.
Look, Francis is a very smart chap. Vulcan's been very successful. It is ASX listed. Its business is in Germany. I would just love to dual list them on the Aquis exchange, so that it's not going to cost you too much, no more regulation. Please, Vulcan, one day do it, because we know we could get European and British shareholders into you. That's my plea there. Moving on, the other one I think it's worth a quick mention. It's fairly small news, but it's dual listed as well. Is Neo Metals, which has got a vanadium slag reprocessing business, hasn't it?
Yes, that's right. Neo Metals had indicated that they have arranged a time extension out to the 30th of September for its final investment decision from its European bankers on that funding for that slag project. It appears to be just delays as far as getting final negotiations completed in this particular case.
What's going on with these time extensions and Scandinavia? Because that isn't Beowulf Mining also doing that?
Yeah, Beowulf had a similar announcement today for its Graphentex subsidiary. In this case, Beowulf's was about not having all of the data and work milestones completed up to the prior anticipated target date. So they've pushed the municipality in Finland, where they were going to put their battery anode materials plant for the Graphentex subsidiary, has allowed them an extension on purchase and commitment there to the 31st of January of 2024. But I think we're meeting with some time and labor commitments, shortages in the various parts of Europe in order to get as many of these projects done. And in some of these other cases, that the working capital shortfall from lack of or slowdown in funding in Europe is having some impact too.
Yeah, and after yesterday's exciting news with Imerys and British Lithium, there's a tiny bit of news out, isn't there, on Cornish Metals and Cornish Lithium today. Do you want to comment on them?
Cornish Lithium published their 2022 sustainability report today. Among their activities, they had completed life cycle assessment for the proposed Trelever project based level process flow sheet. They've held a number of 17 community drop-in sessions around the project area during the past year and have done various parts of reporting and training for staff and the local community around environmental health and habitat and so forth and so on. So they've committed around 44,000 pounds worth of funding to local community projects as part of their sustainability initiative.
Yeah, the trouble is, as we know from the FT on Wednesday, they are desperately short cash at the moment. But so there we go. And Cornish Metals just had their AGM, didn't they?
Yes, that's right. Cornish Metals. They said farewell to their founding chairman, Grenville Thomas, because he didn't put himself up for re-election this year.
Okay. Obviously, also, Richard, if you're listening, I'm going to be in Cornwall all of July. If you want to play around and golf at Trevose, do give me a shout.
All righty.
Not you, Paul. Richard Williams, the CEO of Cornish Metals. Anyway, yeah. Anything else, Paul?
Yeah, we should mention Endeavour Mining since it's listed in London along with its two other listings. It has sold its Bungu and Wagnion mines to a new name to me as far as those investment group. It's a group of West African entrepreneurs who call themselves Lilium Capital, and they've sold it for terms and conditions of $300 million. As a result, because these are two operating mines of Endeavour, Endeavour then has reduced its gold production guidance for this year to accommodate that loss of production on their balance sheet. So I guess the question that comes up to me is Endeavour Mining had the value of these operating assets near $600 million in book value, whereas they've been sold for $300 million. They were therefore considered non-core to Endeavour's story. And Endeavour does have two other mines in scale up or new development anyway, which will have better cost profile, better production profile. So I can understand why they sold. The question then is what will Lilium Capital, what do they intend to do with these? What would be considered some really advanced good assets here?
Okay. Anything else, Paul? Should we call it day on Friday? Call it day for now. We've got our the VSA Capital Summer Party today, so we need to get ready for that.
Okay, we'll see you then. Well, we'll see Ollie then again next week.
Okay. Yep.